Good afternoon, welcome to Market Wrap number 229. Stuart Williamson here at the helm. Thank you for watching. This is APW. We work with expatriates and international investors trying to help them find property around the world. And this is our wrap where we talk a little bit about what's going on and how you can navigate the white water and the rapids of property investment to make it work best for you. And that's what we do. We help people trying to attain their financial goals using property. Now this week we also had the budget out in the UK. It was long talked about and there was a lot of worry about it, people selling their properties and that sort of thing. And it's not been ideal by any means, but not as bad as it could have been. And so that's what we're going to cover today. Before that, just a couple of comments from last week's Market Wrap. We have the persecution of landlords will only be passed on to the tenant. 50% of landlords shall leave the market. Rents will skyrocket. And I think after this week's budget, I think there's every chance that people in the UK will be seeing that and doing that. And why? Because a lot of landlords my sort of age, and they were baby boomers, and they bought, and now they just had enough. So you can see that occurring. But what it does mean is that for people going into the market, there will be a buying opportunity to buy properties that are going to go up considerably in rental income, because there's just not going to be enough property out there. And the government's recognising this, and one of the things it's doing at the budget is social housing. A lot more talk about that, so we'll cover that in a short while. Another comment is, landlords are not the problem, interest rates and elites are. Why shall we work for the bank? Government needs to stop buying more than 2 properties, full stop. Not entirely sure what that's about, but it's a free market economy. One of the things that has driven the UK property market over the years and the UK economy is it is free market, and people can come in from virtually anywhere in the world and buy property, which is a good thing. Third comment, take my advice and sell your properties and retire. I don't know if they're talking to me or it's talking to people in general, but that's the view from Mark Waters, 2,600. I think as an expatriate in the international world, the changes that have come in and the tax that has come in is not as difficult as it is in the UK, which is unfortunate for people in the UK, but as international people who can get international loans and perhaps access to a little bit more capital, then things aren't as bad as it would seem. So I personally think with the fact that A, inflation will pay the mortgage off, and B, the tenant will pay the mortgage off, I think it's still a good thing to be in. So onto the budget. This information is taken from Zoopla, Standard.co.uk and Savills. Right, so key highlights were increased stamp duty for second homes. Stamp duty, SDLT as it's known, rises to 5% for UK buyers and 7% for international buyers. For second homes this is. So previously we're buying something, say £150,000, we're going to be paying 5% in stamp. Now we're going to be paying 7% from overseas. Is that a huge amount? I think when you're buying and looking at the longer term, it's not that big a deal. And this is the point, people who want to flip, as they call it, buy and do it up and sell on, that's going to impact them more because cost of acquisition is higher. Honestly, not for people who are building portfolios for the future to create wealth for themselves or their children. This isn't such a big deal. How much is 2% in the bigger picture when you then balance it against what will happen to rentals? Because rentals are really going to go through the roof on the back of this. So stamp duty's gone up. Secondly, capital gains tax. Capital gains to rise to 18% for lower rate taxpayers and 24% for higher rate. Well, most expats would be lower rate because we don't have that much income in the UK or assets in the UK. So that's what we're looking at, 18%. Properties in the UK were rebased from 2015 in value, and so they're only taxable from that point till now. And what has happened in London, for example, over that period, the market hasn't hardly moved. What has happened in the rest of the country, it has gone up a lot. But still, 18% is a profit tax, which it means you've done well. So be happy that you got actually that profit. I would be. It could mean some people want to leave the market. It's possible, but how long will Labour be in power for? Do we really know? Could it be 5 years? Could the Conservatives then repeal that? I think there's every chance. So just delay selling. It might help the market. But if people do sell because of this, it'll again boost the rental demand and yields for those who are staying in the market. Another key highlight is I talk about affordable housing. They're putting 500 million into affordable housing, apparently build 33,000 new homes, and they do need them. Margaret Thatcher, in retrospect, was wrong to sell off all those council houses and reduce and misbalance the market, I think, yes. So there we go. So what are the implications for the market? According to Savills, pressure on buy-to-let and rental prices, higher entry costs, might reduce the number of buy-to-let purchases. Tightening rental supply, limited availability will drive rental prices up, benefiting landlords who hold onto properties or could afford to buy in now. The long-term market stability, less appeal for speculative investors could stabilise the rental market, especially in high-demand areas. Speculation, that is, buy and flip. That's fine. I don't think at this stage of the market it's a great thing to be in anyway. A shift towards committed long-term investors would help everyone plan for the future, the government and people like ourselves. The non-domicile tax changes, that's not great. It'll cool international interest in the high-end properties in London, but we're not in that market. I don't think as a company or as individuals, we're the mass affluent, so it's not a big deal for us. So really, the real pressure is going to be on a reduced amount of buy-to-let, therefore a higher increase in rental returns, which is good, I think, for us. Not being selfish is not good for UK investors. So to summarise, takeaways, what are the key points? Capital gains tax has gone up, residential. Inheritance tax has been locked in the same until 2030, which interesting enough is when the next election is. So it'll still be the same. I mean, it hasn't gone up, I don't think, since 2013. So it's going to be 17 years at the same. So it really means it's just been increased because inflation is devaluing money. From an SPV perspective, if you do, i.e. that's a company that's owning property, if you do pay yourself or the family from it, and it's more than £5,000 now, you have to pay national insurance contributions, which have gone up also. So that's a bit of a pain. Minimum wages went up. That's a good thing. Got up at 6.7%, £12.21. When I started work, I used to get £18 for working 6 hours. So it must have been like a £3 minimum wage in those days. Social housing. Social housing is a good thing. We've got, with social housing, if you buy it, and it's a buying opportunity here, if you buy social housing and you then rent it out, you can actually increase your rent above inflation now. Previously, social housing could only be increased rental on inflation, but now it can be above inflation. So it's a buying opportunity. So there is an opportunity there. Those are the real changes. Greater stamp duty. More people will leave the market in the UK. Opportunities for those who stay and can afford to get in because rentals will be going up. And that's the key. If you can get a rental at the moment, say at 6 or 7 or 8% on your mortgage, and if Goldman Sachs are correct and the interest rates will be cut aggressively over the next 2 years to keep the UK's economy going, and it will be down to 2.5%, then you're paying perhaps 4% and you're getting 7% rental yield. And that's going to fire away even faster. So it means you're going to pay your mortgage off quicker. It'll give you a more value to buy more property with. So good stuff there. Some good opportunities in the marketplace. I would say personally, obviously I've got skin in the game because I buy property myself and I advise people on property. As ever, it's never a good time, it's never a bad time. Because you're just jumping in. Other information out there, it wasn't the big impact we thought it would be for buy-to-let investors, and we can be relieved for that. It hasn't really affected very much. Inheritance tax, if you want to plan for inheritance tax, think about using SPV and then gift the shares away. So there we go. Thank you very much for listening. I hope you enjoyed. Please do comment. No doubt people tell me it's boring again. I am a pretty boring character, and I find it hard to talk about these sort of things and be interested in them because it's just, as all politics, it's just boring and more of the same. Anyway, there we go. Thanks very much for listening. Do take care. All the best. See you next week. And don't forget, like, subscribe, and if you'd like to hear more information, fill in our form below, call to arms, and let us know what you'd like to know about. We're here to help. Thank you. Bye-bye.